Gold as an indicator is not doing what it should be if you really believe we're going into hyperinflation. Sounds like gold is pretty proud of Powell.
I want to ask you about gold. We've spoken about this in the past. I remember we made major headlines when you said your crypto allocation was outweighing your gold position. Have you added to gold as a hedge to the crypto portfolio? Have you done anything with your gold?
I have. I've added a little gold, and I'm using the GLD, which is an expensive ETF, but it's liquid enough. You can put millions in and out in an hour and not move the market. And gold bullion itself, I still keep in storage and pay for the storage. But look, it hasn't worked either. And gold may be the canary in the the canary in the coal mine that basically tells you that peak inflation has been found. And we've seen it because so much of it is disruption of supply chain and disruption of food supply chains. So right now, gold as an indicator is not doing what it should be if you really believe we're going into hyperinflation. Sounds like gold is pretty proud of Powell and saying, you know what, maybe he's engineered a soft landing because it's not been a great asset class of late.
Really good thoughts, Kevin. Just other quick items to talk on here. Curious to get your thoughts on the direction of the U.S. dollar. Many folks thinking the U.S. dollar will keep marching higher, euro will keep marching lower. How do you see it? What path are we on?
I'm in that camp that says King dollar is going to be stronger. Euro is going to probably, worst case, go to 80 cents. I mean, look, they've got lots of external issues there that we don't deal with here. They have the Putin factor, the energy factor, how screwed up Germany is in shutting down all its alternative power. They did that to themselves. That's a self-inflicted wound. The Ukraine, the grain situation. The market knows all these factors, but it doesn't give you confidence to stock up on euros. And, you know, for me, the way I'm playing it is I'm buying the top 50 European names in their local currencies, in Swiss francs, in euros, and British pounds. Because if you look at a Nestle or you look at American Tobacco or a Roche, half their sales, in some cases more than half, are in the United States. And now you get to buy them in their local currency at massive discounts, PE discounts, and currency discounts. So why not take down a little bit of Europe? And I've increased that position for me specifically to 20% of the operating company's portfolio. European names, mega caps, big cash flowers, selling at huge discounts. Everybody hates the European zip code right now.
Okay, and you say towards this recession. So I know there's a debate out there of whether we're in it or not. I'm assuming for you, we're not in it yet.
Well, the narrative towards the soft landing has changed so much in the last 8 weeks because just 2 months ago, nobody thought Powell could engineer anything like this. Yeah. And here we are. It's very hard to call this a recession when you've got full employment. And so is this working? So at least 50% of the pundits or the market now believes a soft landing is possible. And again, a lesson learned for everybody who thinks they can time the market is, look what happened in July. You've got maybe half of this year's returns came in 4 days. And so if you weren't in the market, you didn't capture that upside. And so it's impossible to time the market. You would have never guessed July would have been a good month, but it was.
Absolutely. And on that point, help us decipher this because like you said, we're getting this relief rally, but is it giving us a false sense of optimism, of hope? What's the truth?
Well, the truth is in the earnings. And so far, everybody was waiting to see earnings completely blow up. Didn't happen. Many companies delivered, even the highly speculative tech companies, and we're more than halfway through earnings season, and it looks pretty good. Now, it's not as good as it was a year ago, but it's nowhere near as bad as everybody was forecasting that we would be in the height of a recession right now, and we're not. And so this is a very difficult time to make a decision between fixed income and equities because, as you mentioned earlier in the show, we've got an inverted yield curve that's generally never good. But again, when you can't tell me why we have full employment, 2.5 more million people working, and low productivity, then maybe you want to be a little careful about making more decisions about raising rates or changing policy or raising taxes. They all sound like really bad ideas until you've really figured out the riddle of what's going on in this economy. We don't know.
Exactly.
So my attitude is to stay long equities, continue at a 30% weighting in fixed income. That's very low for me. Usually it's 50%. and just wait and see what happens. My names are high quality names that provide cash flow and distributions. But it doesn't matter what sector you pick. You've been doing quite well in the last 4 weeks.
Let me ask you then this, Kevin. What grade would you give a Powell then? Do you think he's been doing a good job?
Everybody likes to beat up the Fed regardless of who's in that seat. But he's been doing a really good job because, and in my view, because he just doesn't know and doesn't say that he knows what's going to happen next. So he's trying to stay flexible. Rates right now are still at historic lows, even though he's gone through multiple rate hikes. The question is now, what's next? Many people think, well, another one is going to be at 1%. And maybe there'll be an emergency meeting, but I don't think so. He's in the same boat as everybody else trying to figure out where are we in this recession? Is it going to be maybe 2 or 3 quarters of slower growth or no growth? We haven't really called it yet because it's so perplexing to have this much employment. For every job, out there in America that is available, there's a ton of people that don't want it. I mean, you can't hire anybody anymore, which is incredible. And, minimum wages in California, $15 for service providers, maybe in the food industry. You can't get anywhere at $15, 21, 22, 23 right now. So The economy is self-adjusting. There is a ton of people that just don't seem to want to go back to work.